afternoon, everyone, and Happy New Year. So firstly, thank you for joining us at our 13th Annual Malaysia Virtual Corporate Day. My name is Ivy Ng. I'm the Head of Research for Malaysia. Firstly, I would like to welcome everyone to our virtual corporate meeting with IOI Corporation. So we are honored to have with us in the virtual meeting today, the management team of IOI. And please allow me to do a very quick introduction. Joining the call today, we have Dato Chor, Group Managing Director and CEO of IOI Corp, Mr. Lee Tuan Ming, Group Chief Financial Officer, Mr. Gong Kian Beng, Group Financial Controller, and Mr. Brosnan Tan, Investor Relations Manager. So before we start, I would like to highlight some housekeeping rules for participants. So please mute your microphone or line throughout the calls when you're not speaking. Should you wish to ask questions, please raise your hand and before unmuting your line and wait for the organizer to call for your name. You may also type in your question in the chat or Q&A box at the bottom of the screen during the Q&A session, and I will assist in posting the question to Dato during the Q&A session. So with the above introduction, I would now like to pass the floor to Dato to begin his presentation of the company before we move on to Q&A session. So over to you, Dato.
Okay. Thank you, Ivy. So good afternoon, everybody. Afraid the camera angle is a bit slanted, so it shows that I'm still not so technologically proficient yet. I have to learn some more. So what I propose to do this afternoon is to have spend about 25 to 30 minutes on the presentation, and then followed by 25 to 30 minutes Q&A, which will be moderated by Ivy. Okay, I move slightly. So firstly, are we on screen share? Okay, so firstly, we just show you our vision and a mission. So this is, of course, we had a vision since 1995, 25 years ago, and only last year we refreshed the vision just before the COVID-19 pandemic. So if you look at the vision we put down there with global presence, because they're thinking that palm oil is a global commodity, and we have, of course, plants and operations in 4 continents. However, in today's pandemic, you may think that global presence may not be such a good idea. However, what is also important is the next one on the when you look at our mission. So part of our ambition is to be globally competitive by adopting best practices. So that is also another leg of why we say we are corporation with global presence. Okay. So this is just a map. I will skip it there. What's important on the map is that you look at the center. So we have a global presence in 8 countries across 4 continents: Asia, Europe, America, and probably a bit unusual is Africa. So we are still the second most valuable company in the plantation sector, as listed on Bursa Malaysia. Total employees, somehow I think it's blocked by the screen, but it's 30,000. And next is the value chain. I think this one you all have seen it many times. I will skip that. Then we go on to the financial snapshot. So what you can see here is that maybe we just compare FYE 2019 and FYE 2020. Actually, the profit is quite stable. The profit is quite stable, but actually, you can see, in spite of the FYE 2019, actually power price, CPO price is probably at its lowest for quite a long period. So, however, because we have the downstream that comes in, so if you look at the composition, FYE 2019, the circle there, the contribution from resource-based manufacturing in 2019 actually was 51%. However, of course, 2020, when CPO price moved up, the contribution from oleochemical, from the resource downstream, including comprising oleochemicals and specialty fats, became only 34%. But overall, you can see the resilience and the stability of our overall earnings, despite the up and down of the CPO price. So, overview now. So we have 178,000 hectares of planted area, and 177,000 of which is oil palm, and the rest is comprised of rubber and coconut. 15 palm oil mills, 14 in Malaysia, and 1 is in Indonesia. But we are going to be one more in Indonesia. Okay, so that is directly owned by us, and apart from that, there is we also hold 32% interest in an associate company, Bumitama Agri, listed in Singapore. I believe it's also some of you are covering that company as well. So this company has got a planted area of 133,000 hectares nucleus, and our effective interest is 43,000 hectares. And if you project that against what we directly own, 177,000, that represents about 24% additional to the what we put out there, 177,000 hectares. So, and we have, because number of estates is 96 estates in both Malaysia and Indonesia. Next. Again, this is just a map presentation. I'll skip that. So what is I think more pertinent, represented on the map just now, is the three circle and on the bottom. So it shows that in the distribution of our plantations across the different geographical regions. So for East Malaysia, that's the largest region, 64%. Peninsula 24%, and Indonesia only 12%. So not much exposure to Indonesia, relatively compared to other major plantation groups. And worth highlighting is that despite our status as being an established plantation company, having been around for quite some time, we are able to maintain a weighted average planting age of about 13.4 years. I would say it's not showing that we have aging plants, because the whole planting cycle is 25 years, so we are somewhere just above the middle. So I would say quite a good age profile. But we expect this to be even lowered down further in the next 4 years through aggressive replanting. So part of the reason why the weighted average age is low is, of course, it's aided by our young plantings in Indonesia. And this next slide on the operational highlights. Only thing to show that cost FYE 2020, which is year ending 30th June, the yield is not good, dropped to only 21.2 tons per hectare. That is of course, that is, I think, is quite in line with other plantations because of the weather. And I would say that is also an aggregate of both Malaysia and Indonesia. So for Malaysia, actually, we have about 23 point something tons, but it's pulled down by the low yield in Indonesia. due to its various issues there. And maybe I should add also that our OER 21.83%, I would say is fairly high as well. And this is supported by our average OER in Peninsular Malaysia, where we have replanted a lot with clonal materials. So for Peninsular Malaysia, we are able to have an average OER of about high 22%, close to 23%. Then a bit of a highlights on the plantation. So first point is to show that we replanted over 10,000 hectares of trees in the last financial year. And this is this already, I would say this is the continuation of a six-year replanting program that we have embarked on progressively. So we are in our second year, second and half, 2.5 years, halfway stage, and we have about 3 more years to go. 3 more years to go to finish to have this aggressive replanting program. By aggressive, we mean instead of the average 3 to 4% a year, you can see it's about 5.5 to even 6% a year. Then the third note is on our ERP system. So we completed the implementation of this ERP system, and of course this is for the plantation sector. For the downstream, we already have a SAP since more 12 or 15 years ago. However, for plantation, if you can imagine, it involves actually more than 96 estates, because you have research units, you have mills as well. So altogether, 107 operating units. We have to implement the ERP system, and the land area is huge, 2.5 times that size of Singapore. As number of users also is about 1,300 users. So you can imagine we took made a lot of effort in implementing this, taking us slightly more than 2 years to finish the whole implementation. And so we are very proud that we have managed to complete this implementation. And somehow for that, so I must say that I was also awarded a Digital Transformation CEO of the Year for Malaysia by this organization called IDC, International Data Corporation, which is an international IT consultancy. So I think what is unique is that in the primary agriculture sector, we are able to implement this, I would say, quite advanced ERP system, and involving so many users. So besides that, we also have this mobile crop monitoring system. This also, I think, is also a key effort under our whole digitalization program. And this monitors the crop quality once it's harvested, and trace the crop from where it's harvested all the way to the mills, CPO mills. Then, and the last point is we implement this mechanization since about 2 years ago or so. So, and we expect to by year 2023, we will complete this mechanization of what we call is the mainline evacuation. So it's different from in-field evacuation, and also from harvesting. I'm afraid we are not. We're still finding ways to mechanize that. I would say the industry have not found a way to mechanize this. The purpose of all of this is, of course, to reduce the deployment of plantation manual labor and the dependence on farm workers in our plantation. So that we started even earlier, 2-3 years ago, before this COVID-19 pandemic presented with this challenge of shortage of workers, or make the problem worse. Now I move to the resource-based manufacturing. So for resource-based, we generally we say there's the midstream, refining and fractionation, and there's downstream, oleochemical, specialty oils and fats. And specialty oils and fats, for those who observe us for some time, we know that we sold 70% of that to Bangi, a multinational seed oil player in America, listed there, more than 200-year-old history. So now we still retain a 30% stake in that globalized specialty fats of business. So the manufacturing facilities are listed there on the second line. So we have oleochemical, we have 4, and for specialty oils and fats, 6 manufacturing facilities. So now we zoom down on the refinery and oleochemical. So we have 2 refineries, Yeow, both in Malaysia. Out of the 4 oleochemical plant complexes, 2 are in Malaysia and 2 are in Germany. But Germany, we call it a specialty ester plant. Compared to Malaysia, we have a fatty acid plant, as well as 1 fatty ester plant. So the Germany one is with the specialty ester plant is we call it that is because about 35%, 1/3 of it is for high, I would say high grade application of pharmaceutical ingredients, So that is a high value added. And beside another 30% or 25 to 30% is for beauty care, which includes cosmetics. So again, these are also, I would say, very high value added. A bit of mention about the associate company, Bangi Lotus Scotland. So this is a Lotus Scotland, because itself has already 140 years history, and so there are 6 plants there, and including in Ghana. So the range of applications are sort of mentioned below, and so it has bakeries, confectioneries, and what's interesting also, infant nutrition. Operational highlights. So only look at the right hand side. So what I want to highlight is for our refinery or the commodity marketing. If you look at the right hand corner, for Europe, we have 52% sales to Europe. Of course, this is a lot of this contributed by our relationship with our partner, Bangi or Bangi Lotus Scotland. So we sell to Bangi Lotus Scotland and also Bangi itself. That's why the weightage for Europe is high. And similarly for oleochemicals, if you look at the slightly on the left, Asia. So our weightage to Asia is high, and that's because of our partnership with Kao Corporation. Kao Corporation is the largest Japanese consumer goods company. So some of these Asia actually is also sales to Japan. Progress and highlights. So for refinery, it's quite midstream. For us, it's just a means to, just an intermediate step to our downstream. So, but what's important for refinery is, I think, worth highlighting for is that is strong in traceability, which is what the multinational look for. So 100% traceable to mill. To plantation is still not fully yet, but I would say it's I would say quite high as compared to other major plantation companies. 68, 70% we are able to trace it back there. Oleochemical, we are going on expansion, 110,000 metric tons a year in Penang. So expected end of 2021 or early 2022 to be completed. I think partly delayed due to the COVID. And okay, we were on the specialty oils and fats side. The last point is that so nutrition category is considered a growth and high value added segment for the specialty oils and fats. So infant nutrition, we have got very good sales there and very high margin. I would say it's like compared to normal margarine margin is like maybe 7 or 10 times higher per ton. So now we want to move from infant nutrition to sports and elderly nutrition. So next is next I think I want to capture this 5-year plan. Actually, we launched a 5-year plan last year. And again, believe it or not, it was just before the COVID-19 pandemic. In fact, I launched it up in a workshop to my senior management team in early March, and just before the pandemic get full blown. And so this is what we have done. So the objective is on, firstly, the first bullet point is so of course we have always been known as a very efficient, cost competitive palm oil producer. But I think apart from that, we want to also move to being a high value added and as well as diversified palm-based products producer. I think I will explain why later on, how later on. And really I'm looking at increasing our resilience and competitiveness for the future. So the 5 priorities in the snapshot is shown there. Increase yield, optimize workforce, diversify crops, increase the non-CPO segment. That's why I say we want to be a diversified palm-based products producer. And lastly, grow the oleochemical segment. I shall give more explanation. First priority, increase the oil palm yield. So of course, all the companies want to increase their yield. So for part of this 5-year plan is that we want to, because we have very good data from the SAP system. So my vision is to segmentize the various age groups of the palm. So whether they are young, mature, prime, and above prime. So I want to capture the yield for each segment, and because the treatment for each segment, each age group is different. So therefore, the general target is to increase the yield across each age group by about at least 15%. And and I think we are very strong in clonal palm production. We have started that. That already got 30 over years history, our clonal palm production, probably 40 years by now. And therefore, just now I mentioned that in Peninsular Malaysia, our OER is high. In fact, in one of the mill, consistently for the whole year, we are able to achieve an OER of close to 25%. That's average. So part of it is so planting material is important, but also important is a mechanization. So the mechanization is that improved besides reducing labor, that also improves the crop turnaround time and reduce the crop losses. So, which also have the effect of increasing yield. Second priority, we all know very well know, but plantation labor is a problem in, especially the foreign workers, is a major issue in oil palm plantation sector. So our target is to increase the land to labor ratio by 20%, meaning we reduce the number of workers by 20%. And this we do, of course, by mechanization. But at the same time, also, we now, again, with the SAP and the crop monitoring system, we also monitor the harvester's productivity, and we have given a target that every harvester should increase their productivity by at least 3% per annum over the next 5 years. Again, the implementation of the SAP and mobile crop monitoring system, again, it also helps to reduce the plantation clerical staff, apart from the manual staff that is assisted by mechanization. I saw a question there just now, when was the SAP implemented? So it started 2.5 years ago, and only end of last year, December 2019, we are able to complete it. Priority number 3 is diversified crops. Because we have always known to be, we are very committed to oil palm. We say oil, and we believe in the potential oil palm on long-term wise. However, at the same time, I also noticed that palm oil goes in up and down cycles, and so my idea is to diversify, try to look for other crops that may not be able to be planted on a big scale like oil palm, but nevertheless is a sizable size, and the profit per hectare of land must be very high. It is at least 2 or 3 times higher than oil palm. So therefore, the target is the next 5 years to plant 6,000 hectares. Not very big. 6,000 hectares is small compared to 177,000 hectares that we have in oil palm. But I think it's a good start. So we're going to look, and already we have started with coconut, kerna. Kerna is good for producing fiber that is used for the car component part, the dashboard. Their fiber is very strong, and also for building materials. And of course, durian, we all know about it. So these are really what we have done. But at the moment, we only managed to plant about 500 hectares. But we have a program to plant up about 6,000 hectares in the next 4 to 5 years. So, okay, and of course, we look at the last bullet point. While waiting for the coconut or even oil palm to grow up, we are now looking at intercropping. So in 2 or 3 years, while they are in a maturity period, to plant fast-growing but high value, but also I think quite profitable cash crops like pineapple and banana. Okay, and 4. So now expanding to non-crude palm oil segment. So I put a target 100 million operating profit from this segment, and we already started on some. For example, the first one, oil palm trunk, by producing palm wood panel for use as building materials. So this project we have launched it. We partner with a veteran player who has been in the industry for a long time, using rubber wood to do rubber wood panel. But now we want to use his expertise to help us to do this oil palm trunk wood panel. The benefit of this as a building material is also tested to be fireproof. fireproof, which is good for a lot of building material usage. And the rest, I think, the rest we are exploring still. For EIB, steam and power generation, we have done it already in Sanakan edible oil, but the others we are still talking to people. And lastly is methane gas for biogas, which is we generate biogas for steam and power generation. So out of our 14 mills in Malaysia, we already installed eight biogas plants, which is now producing steam and power for our, not just a mill, but also for surrounding worker quarters and office, estate office, etc. So what I'm doing is that so we always use market price as the benchmark. So the value of this power in the market price will become, and then minus the cost will be the operating profit of this non-CPO segment. Next. So the last priority is growing the oleochemical segment. So again, the target is 100 million. 100 million is every increase annual operating profit in 4 years' time. 100 million is about 30% of the present operating profit of oleochemical division. To me, already 15%, I would say, is more or less taken care of already, because we have this new plant expansion, which increases the capacity by 15%. So now we have to find another 15% more of the additional profit contribution, and this will be done by various methods, and we are looking a lot to our plants in Germany. So in Germany, actually, we started filing patents in the pharmaceutical, for certain pharmaceutical ingredients. So far, we have 14 already registered in our name, and because of that, we are now also collaborating with multinational pharmaceutical companies on certain projects. And once the project is successful, then it will be I would say quite a assured stream of profit contributions flowing in. And by the way, if you compare the margins from pharmaceutical ingredients to margins from fatty acid, which is what Malaysian people are doing mostly, actually the difference is anywhere between 15 to 30 times. 15 to 30 times of the margin of fatty acid. But of course, the volume is much smaller. So I think that's okay. We finished the 5-year plan. Can we go on? Okay, sustainability is this second last slide already. Sustainability is important, of course, very important. We have already, of course, we embarked upon RSPO since 2007. We are a member before that even, and so therefore today all our plantations in Malaysia are RSPO certified, and we are in the FTSE4Good Personal Malaysia Index. And then you can see the 4th bullet point. We got this National Council. Safety and health now is very important, so we got that award. And the last one, Climate Change Action Initiative. So last year we launched this initiative, Climate Change Action Initiative. So the target is to reduce the carbon intensity from our operations in the year 2025 by at least 40% when compared to 2015 level. So over 10 years, we envisage to reduce the intensity by 40%. So there are various measures that are involved, I think some of it, and one of which is actually by aggressive replanting, and because of the higher yield, so therefore we are able to reduce the carbon intensity from our operations. So already, this we measured it 2020. End of 2020, we measured it. Already, if you compare to 2015, we we managed to reduce the intensity level by about 20 to 25%. So we have another 15% more to go to reach the target. The last slide. The awards and achievement. I will highlight the first few. So, and I think more pertinent for the analyst community and the fund community. So we have highest return in equity over 3 years in the plantation sector as computed by the Edge for 2 years consecutively. Last year we got an award, and this year, no, sorry, 2019 got an award, and 2020 recently we got an award. And also highest growth in profit after tax over 3 years. That's the next one. Again, we got the award for 2 years already. The third one also I'm quite proud. That's for the best corporate responsibility initiative for big cap companies. So we got the award in 2019, but in 2020 we didn't win the award. Then we have the number 4, Asian Money gave us the most outstanding company in Malaysia for plantation sector. And number 5, it is also I'm personally fond to mention. That's for leadership trust. So PwC Malaysia organized this. It's it's an inaugural award. It's mentioned as special mention, but actually we were the winner for that special award for leadership trust among the employees. So I think today, that is what we have been emphasizing a lot on, about trust and in the company. Then the rest is number 7. We are the Malaysian Palm Oil Board gave us the best oleochemical company in Malaysia. I think already we won the award 3 or 4 times in the last 10 years. So I believe yes. So I believe that that's the last of my presentation. So I'm ready to answer any questions if you would like to ask.
Thank you, Dato, for the update. So we will now move to the Q&A session. So just a reminder, should you wish to ask question, please raise your hand before unmuting your line and wait for the organizer to call your name. Alternatively, you may type in the question in the chat or Q&A box at the bottom of the screen during the Q&A session, and I will help post the question to the corporate presenter for them to address. So Dato, let me ask the first question that I can see from the chat room. So regarding the ERP system, the participant would like to know whether other plantation companies are using this kind of similar system, and what kind of perhaps value add or cost savings do you expect from this system?
Okay. So for this, I think the only other major plantation company that I know of is GSC-CIMB, who has this SAP system. I think the ERP, I think each other companies have got it in various forms. But I would say SAP is, I think, widely known to be the gold standard in the ERP system, and more complicated, but more expensive, but supposed to be very good. So can you quantify economic advantage? So I think digitalization, it's not just a pure quantification exercise of savings, etc. So it's also about efficiency, reliability of the whole business processes. So we don't have, because it does not capture all the value. So we don't put much effort into trying to calculate how much it saves us in terms of the reduction in number of clerical staff or management staff. So we don't have that, but we know that it reduces the clerical staff in plantation by at least 20%, 20 to 25%. Head office side, immediately there's no, corporate office side, immediately there's no saving. But then I think over time, the number of people will be less. But I look at it as more than that. It's not just I look at it as a platform that we gather our useful data for operations so that we can use this data for a variety of purposes. So we can use this for scenario planning, using weather data or whatever. You have to interface the data so that you can do a proper scenario planning. Also, when we talk about this artificial intelligence, sensor, or that, again you need data. So therefore, this SAP will be the base platform from which all these industrial 4.0 ideas that people talk about can be launched, or can be explored. Next question.
Yep. Okay. Thanks, Dato. Maybe can I just ask? You mentioned it's costly, right? How much does it cost you to implement the system?
Why you want to implement?
Just to give us an idea, roughly. Don't have to give us the exact number. Do you have a figure or roughly?
Maybe I don't want to disclose a figure, but it's expensive. It's tens of millions. Tens of millions.
Is part of your capex or is expenses?
It partly but mostly capex. Mostly capex and part expenses, because we are also using the cloud services. So there's a third-party service provider.
I see. Okay, got it. All right. The next question, maybe from myself, is just now you mentioned about the non-CPO segment that you are diversifying into. So how much capex are you dedicating to this division? And when you talk about the target, right, roughly how much are you making from the CPO, non-CPO segment today? And so we can gauge like how much more can we expect over the next 4-5 years? Yeah.
Yeah. So this is a new initiative, new exercise. So of course, in a way, the biogas and all that, that can be captured. I'm afraid I don't have the figure how much is that, but that probably just run into just around 10. Each meal is probably your saving of 1 to 2 million. So if you say 8 meals is probably 16 million and can go up to 20 million, 20 plus million. But I think besides that, we are also looking for, and then we have this biomass boiler, cogen system in Sandakan refinery, cogen, steam and electricity. Again, that one maybe the profit is like 5 million. So for this, the capex, we don't have all the answers yet, because if you look at it, to start a project from beginning, from inception to completion, it takes at least 2 years or 2.5 years to build a plant. So if you look at it as actually in 5 years, I said it's not to complete the plant, but to have identified projects that is launched. So the palm wood is already launched. So that one, the investment is let me try to recollect. It's 80 to 100 million. Yeah.
Okay. All right. Got it. Next question is on your production. How much, I guess, you're looking at in terms of production targets over the next 3 years? Maybe we can start with the production target for this financial year, and then I guess it'll be a bit difficult unless you have targets for the next 3 years as well.
Yeah. So production, because of the aggressive replanting that we are doing, so even though we foresee yield will improve, say by maybe 10% or 8 to 10%, because in terms of FFB volume and because of higher oil extraction rate, but because we are doing such an aggressive replanting, actually we are at best, we are just going to maybe have a 2 or 3% increase of our FFB volume or oil volume. So that's not the so volume wise the improvement will be very small if at all, because but efficiency OER we can definitely see the big improvement. Every year we managed to increase we have a big jump 2 years ago. So you can see FYE 2018 our OER was 20.9%. Then 2 years later is 21.83%. So over 2 years 1%. So that's I would say quite a big. This across 15 years. So I would say it's quite a big increase.
So, Dato, the OER is driven by the clonal planting material, or is more than that?
Clonal material, of course, many is need better material due and a lot of it contributed by clonal, but also I would say the normal seeds also there's been improvement. And of course the mills the mills people would not be happy if I say it's not also because they have become more efficient. Also, okay, maybe another thing is the cooperation between plantations and mills. That's very important in terms of getting the ripeness standard, correct ripeness standard.
Okay. Does it have anything to do with kind of upgrading of the mill, or have you been upgrading the technology of the mill, or the mill technology is broadly the same, but it's more from the upstream that is a more efficient?
Yeah, I would say more from the upstream, and technology is quite haven't changed.
Haven't changed. Huh? Okay, yeah. Got it. So next is on your view on CPO price, Dato. So your view on CPO price and how does that impact your financial performance, and also why market doesn't seem to be too excited about it despite in terms of the share prices of plantation companies, despite of the high CPO price.
That's also the question that's on my mind. I'm glad you point it out. So you represent the market, or maybe collectively you represent the market. To give you an idea how much CPO price has increased. So if you look at the lows of May 2020, 2,000 ringgit. Now it is 3,800 or 3,900. So that is about 80% increase. Okay. But if you don't talk about that, that is from the low to the high. But you just talk about, I would say, for me, the long sort of medium-term average of palm oil price, I would say roughly is 2,600, 2,700 per ton. So now today is at 3,000, 2008, 2009. That's 40% increase. Okay, you can argue how long that can be, but for me, it's at least started in November last year and is continuing until May or June this year. I believe the experts has also brought it out during the MPOC conference during the last 2 days. If you look at other sector where the price increased by this amount or maybe higher, slightly higher, glove and even aluminium. Yeah, we know there's certain aluminium company. Price of aluminium increased by 30-40%, but their increase in share price is 100%, more than 150%. So, but for palm oil, I'm not just saying for IOI, but for palm oil price increased by 40% from, I would say, long term, the medium or term average, but the share price hardly moved. So so that's also something that confound me. And so if you talk about the logic of it, and I think the production is again so much. There's so much uncertainty. Even people project that production will increase later on or that. But again, anything, there's only negative factor. There's hardly any positive factor that suddenly increase the yield. So there's only the negative factor like La Nina that is occurring now. People did not expect it to be so bad. So it came so bad, worse than expected, and therefore the price just shot up. So to me, I think for the increase of CPO price and which I see at least until May or June, and even after May or June, even if you go down, I would say it's still above the long-term average of 2,700 ringgit. I think some firm have revised upwards their average for this year, 2021. Average palm oil price is 3,000. I've seen some. I know who they are, but I don't want to name it. But that's how I think we are looking at it. So very good. You analyze it very well, but it's not reflected in the market, in the share price, I'm afraid.
Do you think it has to do with some of the concerns in the marketplace relating to perhaps, some of the CBP recent announcement on ban on some of the Malaysian planters' palm oil, some issues with regards to sustainability and so forth? Do you think that is something perhaps that is concerning to the investors, and how soon do you think that can be addressed by the industry?
Yeah, it's certainly a concern, and I think this I think the CBP move at the 30th of December on the case Samdabi, I think is very strange. So, and it's I would say it's a last move by the Trump administration to sort of flex its muscle. So, I think even as a fellow player, even though we say a competitor, we are not. But yeah, as a fellow player, I also sympathize with their situation in that the CBP never come and never send any officer to come and check on what is going on. They just based on NGO reports and they make the conclusion, or press reports and they make the conclusion. So I think going forward, the trend is there, but I think it can be, what is important is what is really happening on the ground. So if you talk about how we treat labor, how we treat our foreign labor, housing minimum standard of housing act now is such a big issue. So in the construction sector, the foreign workers are in the city are all staying very close together in the dormitories. For plantation, we have complied with minimum standard of housing since 1970s. So to us, it's not a big issue. So we have always given good housing to our people. They all live in terrace houses. Some is semi-D even, and they have plenty of grounds around to plant vegetables. So I think we treat our labor well. But that's why I say going forward is indeed one. But in my CEO forum, I think some of you may have attended. So to me, these are sort of noises. Okay, what's more important is the fundamental supply and demand. So you look at so in spite of all the attacks, etc., the anti-palm oil campaign, if the supply is short, the price still goes up. And I would say that all this talk about deforestation or that by the Europeans is all they are using data that is long time ago. They will use 1995 to 2010 data. Ask them why you don't use the more recent one? Oh, that's the best way, most current. So of course data on those 15-20 years ago is very different from data in the last 5 or 10 years. Last 5 years, there's, I would say, very little expansion of deforestation in Indonesia, because from my observation. So I think this is more importantly, sustainability is a given. I think we have put in a lot of effort. I would say the oil palm plantation, we are one of the earliest to embrace all these ESG principles. And but looking at it, I think fundamentally in terms of supply and demand, I I think still I'm optimistic about the palm oil outlook in the foreseeable future.
Yeah, Dato, can you give a specific average price outlook for 2021? Because there's another question on the Q&A chat box. 3,000, is that the average?
Okay, quite close. I would say quite close. Quite close to what?
Average for calendar year 21?
I would say quite close.
Okay.
Because I never want to predict price that is beyond 6 months, because I think that's anybody's guess. But
all right,
I would say quite close to my expectation on average. That means the first half of the year will be well above, will be
above
like
3,000.
above 3,002, you know, that kind of level.
Okay, good. Okay, there's a question. This is in the Q&A chat box now. There's a question on your RSPO status for your Indonesian plantation.
I don't know what. Okay, so we are. So I don't know. This we are talking about the earlier issues or suspension or what.
I think they wanted to know perhaps whether it's certified at this moment.
Oh, okay. It's just a normal operational question. So this one we are undergoing because of the COVID. We are supposed to get certified last year, but we couldn't get auditors to come in. So now probably this year we will start doing the certification. So we are ready to be certified one grouping at a time for our Indonesia.
Right. Okay. So it's just progressing. Yeah. So the other question is on how the higher CPO price will affect your different downstream division. Whether you can pass on the cost and so forth, and or margins will be affected. And perhaps I can also add in, how has the Indonesian export levy also impacted the competitiveness of some of your downstream business?
Yeah, so definitely it's affected. The margins will be affected if raw material price go up so fast. So the final product, the final product cannot adjust to such a sharp increase. So yes, margins affected. But if maybe I put in the COVID pandemic effect. Actually, COVID-19 pandemic, people thought it has effect on the downstream manufacturing, but it's actually the effect is small. That's because for hand sanitizer, for PPE, we uses oleochemical ingredient. So sales volume for that part is actually increased, offset the reduction in other parts. Now for the export duty, now on the export duty component, yeah, indeed, also that definitely Indonesia downstream has an advantage because of this export duty on CPO, making CPO not so much cheaper within the country. So I pity the CPO producers in Indonesia. The export duty per ton plus the cess is US 300, close to US $300. December it was 180, and in January it jumped to nearly $300 per ton.
So the discount is now about 1,000 ringgit in Indonesia versus Malaysia, right?
I have not checked it, but I read some reports. There seems to be a level.
Right. Okay. Maybe we will answer a few more questions. Also, they are quite interested to see how much your superior planting material can yield based on what you've seen so far, perhaps in the early years of plantation, and how much of your estates have been planted with these higher yielding seeds.
Okay, how much of my? So for West Malaysia, we have started, I would say 7-8 years ago, West Malaysia. But the pace of West Malaysia replanting, the size is not so much as in Sabah, because we have bigger hectares in Sabah. So Sabah, we start. So West Malaysia, we started, I would say even 10 years ago, 10, 12 years ago. That's why, and we have substantially completed replanting. Out of that, I would say 30% is clonal materials. So we are seeing the good effect of that on OER. So Sabah just started two to 3 years ago. So yet to see the effect.
And how big yield, or how much yield can you get in the first year of perhaps harvesting now with the new planting material? Is that substantially higher than what you saw previously?
FFBU, not, I wouldn't say substantial. FFBU, I think FFBU not much effect, but the real effect, the big effect is on OER,
Okay.
which can be 13 or 15% higher. The FFBU, I'm afraid, is a multitude of factors, depending on rainfall, the sufficiency of workers, and I'm afraid for that part, it's not very friendly towards the oil palm industry the last few years.
Okay, Dato, maybe we answered the last two questions before we end the session. One is a hot topic on the foreign worker restriction. Where are we now in this situation? Is the government easing the restriction? And then lastly, maybe on the utilization rate of your downstream facilities at this juncture.
Okay, so the freeze on the workers, I would say West Malaysia, the effect is larger, but because of the low production, so actually we don't have so much losses because of the insufficiency of harvesters yet, because production has been down. But we can see that if it's say April, when production starts to go up, then we will have a shortage if there's no new workers coming in, and if some of the workers now are going back to their country. But strangely enough, Sabah somehow we can get new supply of workers. Okay, so therefore we don't have such a big issue in Sabah compared to West Malaysia, because a lot of them actually the workers, they are like semi-foreign, they are Filipinos having resident status in the state, either so therefore they still coming in. Some Filipinos, some like a mixed kind of ethnic origin.
So they are not affected by the current freeze, these foreign workers.
Yeah.
But specific to Sabah.
I think so. Yeah.
Okay. And the utilization rate of your refining at Oleo?
Not much affected, because as I said, it's down because some parts are affected by COVID, but some parts are improved because of COVID, the hygiene side, soap and all that. So not much affected. So
fairly stable, and maybe
only the margins is
margins affected. Yeah. Okay. And maybe this is a question most people are wondering is, how soon do you think the government will lift the freeze? Do you think they're going to lift it soon to help alleviate the shortage in the industry? It's more of an industry question.
Yeah, I'm not that hopeful, because you can see all the figures are going up. I'm not so hopeful, but that's why this mechanization we are going on. In a way, we started the 2 years ago. So in beginning was very slow pace, but we have accelerated it. So in a way, that's why that helps us a bit also luckily. So
okay. So I think we have answered almost all the questions we have in both the chat and Q&A board. So I would now like to pass the session back to Dato to give his closing remarks.
Oh, I see. Okay. Actually, my closing remark is probably intended closing remark was probably captured in when I answer one of the questions, what my outlook for palm oil, and I was going to throw back the question at the analysts and farm managers. How come the market is not reflecting this positive outlook on palm oil. But you all have asked, so I've done that already. So therefore, I have nothing further to add.
Okay.
Thank you.
Yeah. Thanks, Dato. I think they're just warming up to the idea of investing in palm oil. After your bullish price outlook, I think more people will look into it, and perhaps we can see the share price reaction. So with that, I would like to take this opportunity to thank Dato and the management team of IOI for spending an hour or so with us on IOI Corp. And I would like to thank everyone for dialing in and listening to this session. So thank you, everyone. So I think we come to the end. Thanks, Dato.
Thank you.